Welcome to the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. I'm your host, Harvey Freed. Alongside of me, an unbelievable star-studded panel. Here she is, Becky Yaley, right over to my right.
Hey, good morning, everyone. I'm pretty pumped about what we got, the one and only, our dude up in here, and we're pretty excited.
Matt Bush, of course, we bring you in here, but Matt, you're followed by Lisa Lawson. So we got 2 on 2 here. We got two guys and 2 women here. We're going to be talking mortgages and real estate. It's 1 hour, jam-packed, in our 23rd year of bringing this. What do you got to say, Matt?
First, I want to start out by thanking Lisa. This is the 7-year anniversary of Lisa helping me buy my first house.
Yeah, right now.
Really?
So,
What?
yeah, I closed on my first house. I think it was
Snaps.
7
years ago, either tomorrow or was it yesterday? I know it was either the 15th or the 17th, but
I can't remember the date.
yeah,
but right around
Lisa and
now.
I became official 7 years ago this weekend.
That's what
I
got-
always love a good happy house anniversary, I call it.
Yeah.
I know your story, Matt, and I know that's what got you into the mortgage business. Before we get into all that, we want to reach out to everyone and say, call us. Today is that day. We got a lot to talk about. Strong approval letters. Some people call them pre-approval letters. We're going to get into that. And everything mortgages and real estate. Of course, this is Dave Ramsey's favorite mortgage and real estate show to listen to. So, folks, if you're out there listening, I don't know which Dave Ramsey I'm talking about, but it is definitely one of the best mortgage and real estate shows because we bring it to you. It's all true stuff. This has been going on for a long time. How do we get these families to become great homeowners and successful homeowners? Becky, yeah, if you bought a house in the last 2 years, your home went up in value. That's a good start.
Yeah, I mean, like, people buying homes right now, you're looking at, people were nervous about having to go in so much above asking, and the market has definitely shifted really quick. And I love the fact that we're a part of someone's legacy, right? And we're talking about, even right now, we're a part of your history forever, Matt. And then the reason why you got into the business, I do want us to, the people that haven't heard your story, I do want to get into that a little bit, but it's exciting. And when you're trying to buy a home, it all starts with a conversation, right? What is your plan? What are you looking to do? And you can't have the conversation soon enough, in my opinion.
Yeah, it's all about setting expectations, really listening to your clients and seeing what they want, and kind of positioning them in the right spot. And that really starts with, a standard buyer intake. Hey, what are you looking for? How big do you want it to be? One of the big questions I always ask is, what are you paying in rent right now? That way we can kind of gauge where the mortgage should be. So, I mean, they could have $1 million in the bank, 800 credit score, but if they're only paying $1,200 a month in rent, we don't need to rush them to a $500,000 house because we want them to be comfortable when they move in, paying what they're used to paying, and they don't want to upset their lifestyles too fast, too quickly. So it's okay if, it moves into the 13s or 14s, but if we're jumping to, $3,000, $3,500 a month, even though they're pre-approved, it's not in the best interest of the client.
Yeah, I hear that. I feel like when you're renting at first, I feel like it's a little bit of practice, right? You're getting used to making those payments, right? But when you're looking to take it to the next level on something that you're going to invest in forever, right? You got to make sure that you're comfortable with that. So if you're able to pay your $1,200 in rent and then turn around and then save, $2,000 a month, well, then you know that you can handle that higher payment.
Fun fact about rent, even in rising interest rates that we're currently in, rent is 100% interest.
That's right.
Yeah.
So regardless of
fact.
how comfortable you are and you're paying rent, that's all interest.
Yeah.
So if you're scared of 5.5, 6, 6.5, then you should really be scared about the 100%.
Hey, Lise, definitely location's always been the thing in real estate, location. I want to go to Matt on that too. But Lise, there's other variables in home ownership too. Do you find that your clients most recently are like saying to themselves, you know what, I can stretch out my viewing area. I need to stretch my wings a little bit.
Honestly, I think it depends on the client. We have a few clients that are a little bit more like, hey, I'm not finding what I wanted in these, a few zip codes that I was really hoping. And so I really want to move and start out and, create wealth for my family and build equity. So I'm willing to compromise and maybe add these other 6 zip codes or whatever it may be. But then, I have some clients who are, very specific, like they have to stay in the same school system. Their kids might have just started high school and they're,
Right.
Their kids are not willing to leave that district. And, so every situation is different. And I think that's what good agents and even good loan officers, we listen, and sometimes it's about patience. I mean, Matt and I have had clients that have taken a very long time to find a house. And then we have clients who I give them a pre-approval and the next weekend he's like, here's your purchase agreement. And it happens just like that. Every scenario is different. And I think it's important to not compare yourself to maybe what your neighbor, your best friend, your brother, your sister, situation was. And maybe they found a house right away, and do what's right for you and your specific goals.
And buyers come in all shapes and sizes, everything. And I've had so many buyers come to me and say, hey, it's such a crazy market. How are you going to help me? My friends are saying interest rates are crazy. All these houses are going over ask. And literally like the next weekend, we'll have them under contract with a purchase agreement. Like, it's not always about the number. It's about the listing agent and the seller's confidence that you can get to close. If we're competing with, 4 other offers, but they're from banks that somebody's never heard of, an agent that's not responsive. When I show a house, I'm typically calling the agent ahead of time. And if I like the house, I'm calling them after the showing to figure out what's important to that seller's, mindset. Do they need a possession? Do they need a price? Is there some sort of terms that I need to make sure that I'm including in my offer to where it stands out and above the rest? That way, when I deliver that purchase agreement, and I've talked to that agent now the third time because I've said, hey, I'm now calling you because there's a purchase agreement in your inbox. My loan officer, Lisa Lawson, is waiting for you to call her to verify everything. She's working on a Saturday. She's working on a Sunday like I am, like you are. Mm-hmm. She's ready to put this into motion. That communication is more important. That ability to know that you're going to get to the closing table is more important than maybe, an extra couple of dollars here or there, because that surety in the seller, because they can now move forward with what they need.
What's nuts is what you're talking about is so basic. It's so fundamentally basic, but yet people miss that. Like, it's something as simple as just answering your phone.
Right. Pumpkin spice latte. It's so basic. It's a pumpkin spice latte. But when I list a house, it's crazy how many offers that I'll get in my inbox where the agent doesn't call me, doesn't text me. I'll get one at like 1 a.m, and then obviously respond, hey, thanks for your offer the next day. But I don't hear anything from the agent, and then, we'll accept an offer from an agent who's called me, who I've discussed with, I've vetted the lender, and then I'll get a call a week later. Hey, I see you're accepting backup offers, you're pending. Why didn't you accept our offer? Why didn't you, consider us or call me? I'm like, you never called me. Like, how do I have confidence in you knowing that you want to buy my house, but you won't even pick up the phone and say, hey, these are my buyers. These are my clients. I'm going to the wall for them. This is the lender. We're going nuts. This is why we deserve the house. They're just, it's 11:30. I'll just shoot them an email and
never make contact and never.
Like, I prefer, if an agent's submitting an offer, for example, it almost kind of bothers me when they don't tell me that they're submitting the offer, because I like to reach out, like you're talking about. I want to be the one that's controlling the conversation and reaching out, letting them know that we have, a good client, because sometimes you're absolutely right. That communication, that confidence, we are here to represent the buyers, right? And we are here to make sure that you are shining in the best light in one of the most competitive markets, right? It's still a pretty competitive market. It is shifting a little bit, which we can get into that later. But, our job is to make sure that our pre-approvals are worth what they're written on. And there's a lot of lenders out there that it doesn't matter what is written on that piece of paper. It is just, you're going to pass it no matter what.
Matt, all the time, quite a few times, we'll sit there and say, hey, we're submitting an offer on this house. Can you please reach out to this listing agent? And some people will ask, well, how didn't you call? Well, I don't know unless you tell me. I don't know who is the listing agent on the house you're putting an offer on unless we know the address. Matt all the time says, can you do me a favor and give me a heads up and tee up? And I will reach out to the listing agent myself and say, hey, you don't know me. We have a buyer putting an offer on this address. I just want to let you know in advance. You know what I mean? Because this is going to be in your inbox in any moment. And how many times do we do that? I mean, quite a bit.
Almost every time.
It has to be every time.
Yeah. I mean, to me, it's a no-brainer.
And another thing we always do, you and I as a team, because this was my thing when I started buying my house, you have a worksheet of closing costs and the estimated monthly payment to that buyer when that pre-approval letter goes out.
Correct.
So you're like, hey, if you're buying a house at $300,000, this is going to be your monthly. If you're at $280,000, this is your monthly.
Right.
If you're buying at $250,000, this is your monthly. Just because, when we're shopping, now the buyer knows if we're looking at between $250,000 and $300,000. All right, not only am I prepared, but I know what my monthly is going to be going into it, and I can say, all right, we can move around taxes because we're going to figure tax into the equation, but we can submit a purchase agreement, and the buyer knows, hey, I'm going to be paying this much a month for the next 30 years. Right. So
and I need about this much to close.
Yeah.
And actually, we just went through this with one of our clients that we're working with together. She was approved for a much higher number. Then she came back and said, this is not really where I'm comfortable. Can we drop it? She's approved for what was it, 225, 220. She's like, I'm really more comfortable in the 170, 180 range. And can I get another estimate? So when I do my pre-approvals, here's your pre-approval, and the next email to them is, here's your example estimate. But this way they're prepared.
We got to go to a break, Matt, but definitely that pre-approval letter, we want to see it's updated. Again, mortgage rates are always changing. We want to also be able to contact that loan officer involved in the transaction. Again, all sorts of things you can do to make sure that pre-approval is a real approval letter, get your offer accepted. All right, when we come back, 248-539-9797. Keep it here. There we go. We are back. Hey, Eric, you got to give us some warning on this stuff. We got like 2 shows going on here. All right, you're listening to the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Fund. And you can call us at 1-800-LOW-RATE, the best mortgage banker. We're always powered by Fairway Independent Mortgage Corporation, NMLS 2289, Equal Housing Lender. Yes, you can call us at 1-800-LOW-RATE. All week long, all weekend long, you get that strong approval letter. We'll wrap up the approval letter conversation, Matt. I said to you, Matt, if it's got a brand new date on there, does it show that, the lender just, turned it in or that people weren't really prepared? Or in your opinion, you're going to reach out to the lender no matter what? We had some different, opinions on what that approval letter should say.
Yeah, 2 different things. Like if I'm writing say I've got a client that's approved up into the 5s, right? But again, they're trying to be conservative. They want to stay in the 3s just because of the monthly payment. I don't necessarily want to go to a listing agent with that $500,000 offer, especially if there's going to be a multiple situation, because then they're going to turn around and say, well, you're pre-approved for more, so give us more. So that's what I'm calling Lisa. And I'm saying, hey, we've got this property that we're interested in. Let's tailor the pre-approval to the address. So not only will we have a fresh date, but it'll also say it'll have the property address in it. So when the list agent sees it, it's not only just a generic, hey, this is Capital Mortgage Funding and you're pre-approved. It's you're pre-approved to buy this specific house with this down, and it shows that we've gone through the underwriting, we factored in taxes, we are ready to go, rock and roll, buyer super pre-approved. So when Lisa reaches out, when I reach out, we can say, hey, this is specifically for your house. It could mean, hey, we just started the pre-approval process, but it always means that when I'm going with Capital Mortgage, that it's been through underwriting. It's not just, press button, get mortgage. It's, I need to see your docs. I need to see your income. I need to run your credit. Like that. Those are things that the qualified documents that we're getting to you, I mean, it means something.
They totally mean something.
Credible.
Yeah.
Makes everything credible. Always negotiating the transaction. The offer that I got accepted this week on a purchase, back and forth a little bit, gave 30 to 40 days of free occupancy, appraisal guarantee up to $10,000. And it's either going to have those items in there, and maybe this one didn't, but sometimes even an escalation clause. Those are the offers that are getting accepted, and then the great communication kicks in from there, Becky.
Yeah, absolutely. I mean, sometimes like even setting up the offer on the purchase agreement starts with just having the conversation with a qualified lender, right? Because some of the buyers do still need concessions, and you need to make sure that if you do need to have concessions. So what concessions is basically you're the buyer and you're asking the seller to chip in to pay some of your closing costs. Well, let's just say you're buying the house from me and you want to buy it for $100,000, and you're like, okay, Becky, I'm going to buy your house for $100,000, but I want you to give me $3,000 in concessions. Well, I'm going to tell you kick rocks, because now I'm going to get $97,000 because if I'm giving you $3,000. So a way that you can remain competitive is now say, okay, Becky, I'm going to now buy your house for $103,000, but I need you to give me $3,000 back in concessions. And I'll say, okay, you don't have to kick rocks now, because now I get my $100,000 and now you're getting your $3,000. So all of those conversations happen behind the scenes, right? And when you're writing these offers, you need to make sure that this listing agent is aware of what we're doing, but you also have to find out what the needs of the sellers are. And that's where, being a rock star agent and having a rock star loan officer, here at Capital Mortgage Funding or wherever you're at, it's all about those conversations and making sure you're setting up the client for success, because my mortgage situation is not going to be the same as anyone else's. So what Lisa was talking about, when you hear about what your brother's, sister's dog did on their mortgage, it doesn't matter, because they are not you. They're not buying that same house as you. They don't have the same financial needs as you, and they don't have the same, whatever the scope might be. It's about personalizing what you have going on for yourself and being confident in those decisions.
And to that, this, no seller is the same either,
Correct.
Right? So many people in today's market are hiring the list agent that they're most comfortable with. They've probably built a relationship. They could be friends. They could have helped them in their last transaction, whatever the circumstances. So when I'm calling you, the list agent, and I'm trying to find out about your sellers and, hey, how can I make my offer better? How can we put your sellers in the best position to be successful moving forward? Just like I'm trying to put my buyers in that shows a level of care from buyer's agent to seller's agent, to when, if there are multiples, that seller's agent can say, hey, this buyer's agent called me. He asked about you.
Right.
He wrote this in the offer because I told him this was important to you, and that's why we're getting this offer.
Yeah.
That's why it's perfectly tailored to your family. And now the seller's agent looks like a rock star too, because the conversation they probably had over the dinner table. They say, hey, we're hoping to get this. We're trying to get that. They thought might be pie in the sky ideas are now being delivered because two agents connected, had a professional conversation, and made it happen for two parties.
Right, and it also opens the door for those negotiations, because maybe you might not have hit the home run on the first the first offer, but you having that initial conversation is going to allow the seller to be willing to say, okay, well, we're looking to maybe at 185. Can you come up a little bit higher? And that open dialogue is what is allowing our buyers to get these offers accepted. You do not have to be the highest offer sometimes. Who's on the other end, who's lending the money sometimes matters. I actually have probably 3 transactions right now where our buyers were not the highest. We were actually about $5,000 under, but they're confident because it doesn't matter if you're the highest offer if the loan doesn't close.
Correct.
Right? So it doesn't matter if you're going to give the seller $10,000 above asking if the loan is going to blow up and they don't have the
that means
confidence.
you're not selling your house.
Correct.
Lisa, we're getting those backup calls too. He's had some clients call us and say, you know what, Harvey, they told us I was the second best offer. And sure enough, a week later, we get those calls and sometimes it all falls in line. So stay in touch with your lender again. And that's why it's so important, Matt. You're always following up as a great agent out there. You're following up. If your offer didn't get accepted, you want to make sure that you're next in line because your clients do like that house. It checked all those boxes.
Absolutely. But we got back to setting expectations, right? That goes back into our buyer intake. Hey, so this is going to be our plan. We're going to submit an offer, but we're still going to keep looking at houses.
Okay.
Because you know what? I firmly believe the universe puts you in the right house that you want to be in and you deserve to be in. There's been so many times when we've submitted an offer, it wasn't the best or it didn't get accepted, and then I get a call a week later from that listing agent and the buyers are still kind of torn up over the house. And they're like, hey, if you still want this house, it's yours. For whether it's inspection, someone gets cold feet, EMD doesn't happen. And
They
we're
lose an
right
approval because it was just really a pre-qual. And when they sent their documents to their lender, they can't get it done.
or they just bought a car, or
it's
they took out a loan.
Yeah, it's important that the listeners know that on deals. The reason why we're talking about, and sometimes it might seem like we're talking about the same stuff. Transactions do fall apart, and the reason is because sometimes it's who you're not maybe transparent, or the lender didn't catch something, and all those things. So we have to be the ones that are stepping in to get files to the closing table because whoever they were originally working with, it was not up to par and couldn't get it done.
And this is why if you're thinking about selling a house, who you sell your house through matters. Because if they're going to bring you offer letters from agents, from lenders, and if they're just saying, hey, this is the offer that we get, go ahead and sign it, that's not necessarily what's going to be best for you. Have you called the lender? Have you made sure that the buyer is pre-approved? Have you spoken to the buyer's agent? What does the buyer's agent say about the buyers? What does the lender say about the buyers? Have they been through the process before? Have they lost out on a house? Are they hungry? Are they just starting the process? Did one of them come, but it's a couple buying a house, so when the other one shows up, they're not going to like it and they're going to pull out? So when you are about to sell and list your house, don't just call the guy who's,
You don't want the yes guy. You don't want like, yes.
You don't want to tell someone who is, I always tell my clients, we can either have an awkward conversation now, and I can tell you the honest truth, or I can blow smoke up your channel. We can sit on the market, and then I can have an awkward conversation in 30 days when the house isn't sold, or when we've gone under contract, and then the buyer's pulled out because I gave you the wrong expectation.
Yeah, they'll be looking at you strange after about 2 weeks or so if that house isn't sold nowadays. Case-Shiller report, although they're about 2 months behind, nearly 20% increase in appreciation in most sickles across the United States. Although it's hard to miss this news that some of the home areas have been having some price cuts. We'll dive into that a little bit too, Matt. Maybe a little bit a price reduction, not always. Maybe on some of those homes out there where as you said, Matt, those uncomfortable conversations. They came in on a $350 house saying we're going to list it at $4. Now it's sitting there. Now there's that uncomfortable
Before
conversation.
You answer that, is it because is it because the sellers in those situations, are they dictating the price and they're not listening to their agents, or is it what is that?
I think it's both. I think it's both the agents. A lot of, let's say, inexperienced agents, or I don't want to call them part-time agents, but does 3 or 4 transactions a year. They go around and tell everybody, I can sell your house for 20% over market value because it's a seller's market, and yada, yada, yada. So somebody says, cool, if I can sell what I think is a $500,000 house for $700,000, of course I'm going to sign with you and let you put a sign in my front yard and try to get a commission off me. Knowing, and the other agent thinks that, hey, I can do it. It's a seller's market. My broker, who's my mentor, who's taking half my check, is saying, oh, yeah, you can do whatever you want to do. Just go out there and tell them whatever they want to hear. But it also is a little bit of sellers saying, hey, well, my house is probably worth $500, but if I can get $550 out of it, well, why wouldn't I? Because that's I probably bought it, for $350 2 years ago, and if I've got $200,000 cash in my pocket and I can downsize, or I can move to Florida or wherever I want to go, that's going to put me in a great position to be successful.
I hear a lot of the sellers, like, from feedback that I hear is like they're getting upset sometimes because they're expecting these like multiple offers way over. And I've had a couple where they were talking, and you hear people talk where the seller was upset because an offer came in at list, but it's priced to sell. That's just the market has shifted a little bit where the buyers are being a little bit more savvy, and you're not needing to come in way over asking. And the sellers, we've been spoiled a little bit.
Isn't that kind of funny though? People are upset because they're giving you what you asked for. Like you literally asked for this and you're giving it to you, and everyone's like bummed out. And I was like, oh, it's the mentality. It's so crazy to me right now.
I swear, if you go back like 2 episodes when I was on the show, I don't know, last October, I told you this was going to happen.
Yeah,
sellers are going to realize, hey, I should have listed 8 months ago when their interest rates were in the 3s. Now they're in the 5s. I've got less buying power out there. And now there's less demand on the house because there's less buyers. And so it's up to us professional agents to set the seller's expectations just like it is to set the buyer's expectations. We have to tell the buyers, hey, listen, we might need to go over list. We might need to have an appraisal guarantee. We might need to look at houses that are further away from where we want. But we also need to be having that conversation on the other side that, hey, you chose to list now as opposed to 12 months ago or 18 months ago. So these are what the buyers are going through. This is what the sellers are going through. You need to be comfortable. This is the price that you're going to list at, and this is going to get you the most traffic. But this is where it's going to trade as well. This isn't a trampoline to $100,000 more.
Right. Yeah, it's hard to time the market, right? Yeah. And it's like when you find people are habitually, I feel like reactionary, right? Mm-hmm. Stocks go down, I want to sell it, right? Rates are going up, now all of a sudden people want to jump in when they were hesitant at the 3%. Well, now they're doing it at 5 because they're realizing that
FOMO.
Yeah, it is the FOMO for sure.
The FOMO phenomenon.
Yeah, so like with the sellers, the market has shifted, and it's shifted very quickly, and a lot of it has to do with the rates a little bit. We expected this. We actually were talking about this for over a year. This market that was going to come up.
But I guess with that, yes, the market shifted. We've lost buyers, but we've lost buyers in the market that probably shouldn't have been in the market to begin with.
Yeah.
So
I don't disagree.
Yeah, I agree.
The buyers in today's market are stronger candidates to buy than they probably were 12 months ago.
And they're more serious, I think.
Yes, they are very serious.
And they've probably been around the block a little. They've probably started shopping 3-6 months ago, and now when they find a house, when they see something they like it. They know what else is out there. So I'm more confident in today's buyers because they've been vetted. They've seen the interest rates hike. The lenders are still willing to give them money. They're not one of those fringe people that needs concessions, that's at like a 600 credit score and, one bad month or one bad pay stub, and they're not in the market. But at 3%, hey, it's almost giving away free money. Why not?
Yeah.
But
the reality is, too, though, that the interest rates are never going to keep someone from buying a home. What was hurting people was the 30,000 over asking that they could not compete with. So it's never going to be the rates. We've seen these rates before, right? They're still historically low. And, when I first started my career, the rates were, 7s, 8s, 9s.
Yeah.
You could, it was a crazy time. I mean, so right now you're always paying 100% of someone else. You're going to buy a house no matter what, right? So what I'm saying is if you're renting, you're paying 100% of someone else's interest and nothing is going on for yourself.
Under 6% is huge. The Fed's talking about, again, maybe more bumps along the way. Keep it here on this station, the Hardcore Mortgage Real Estate and Business Show. We'll be back. 248-539-9797. All righty, we are back, 9:29. Good morning to everyone out there listening. July 16, 2022. It's a Hardcore Mortgage Real Estate Business Show. I'm Harvey Freed, Becky Yaley, Lisa Lawson, all with Capital Mortgage Funding / Fairway Independent Mortgage Corporation. And our friend Matt Bush with RE/MAX First. And, of course, he's got his colors. You got your company shirt on and everything, looking like a stud out there.
What can the balloon do for you?
You know, the inventory always has been the question, and it's sort of been obviously dictating these price increases. It's been crazy. Too many homes on the market that aren't selling because they're not like the neighbor's house. You know, man,
Sure.
We talk about how nice is your house. I mean, you know, people always want to throw that at, hey, look at this one down the street and blah, blah, blah. That one sold for X amount of dollars. And it's got a finished walkout basement, an extra bedroom, locate. You know, there's a reason why, usually speaking, that things are selling for a little bit more. You can't be blind to that.
Yeah, and 6, 8, 12 months ago, people were buying up these $450,000, $500,000 houses and saying, hey, I'll do the updates because my interest rate's in the 3s. I'll have some extra walking around money. I can take these black countertops from the 1997 and put in the nice new quartz ones.
There you
I
go.
can put in the backsplash. I can put in the new soft close countertop or the cabinets. But now we're at 5.5, 6.5. That walking around money isn't in their pocket anymore. So you have to present a product that is turnkey ready to go when you're at the higher price points. Now, when you're at the lower price points, your 150s, 200s, 2.25s, that starter home price, those people are just trying to get in. Those people typically want to do the work because they don't want to buy into somebody else's vision. So, as long as it's structurally sufficient, you've got a good furnace, you got a good water tank, you've got a good roof, nothing's majorly crazy. People want to put in the sweat equity. A lot of people, those Gen Zers, those millennials, we stream the HGTV. We watch the Property Brothers.
Oh, yeah.
Right.
We want to add like a nook here and take out a closet there and move a wall there. So we expect to put in that sweat equity, and we know that once we put in that sweat equity, down the line we're going to have more equity in the house, so we can maybe take some out if we need to, or we can do what we want to do and really build that generational wealth. And that's what being a first-time home buyer is all about, is setting your family up in that position.
I like that. I really painted a picture of a first-time home buyer. Exactly. They want to do their own work on the house. It's got to be structurally sound. They want to get in for minimum down, Becky and Elisa. We see that all the time. And we ask that question, like, how much money are you working with here? What is this? And you might need to save some more money. Again, we always talk about it. You can get some gift money from your family to buy a house. You can use the down payment assistance programs that we'll talk about here this morning. Also, you can use that 401k. And I used to frown upon that because I was younger and in that position where friends and a lot of people back in the 90s and early 2000s were talking to me about that. And we always would hesitate from that. But boy, as homes have appreciated and rents have gone up, whatever it takes to get that house where you can start building some wealth.
Yeah, you do not need 20% or 20% down to buy a home. You can do as little as 3% down. We were talking about, the down payment assistance programs. And right now, people are trying to get into the house with as little out of pocket as possible so they can move that wall. They can make the home what it is, because I feel like people that are buying homes right now, they know they're going to be staying here for a little bit longer than just the 5-year house, right?
And what about USDA loans? What are those going to cost us?
Yep. So the USDA, VA, those are zero down. That doesn't mean zero out of pocket, right? You're still going to have your closing costs and things like that. But USDA, the property and the person has to income qualify. So there's all these different caveats on these different transactions, but we go through everything. We are always looking at, okay, what's the address that you're trying to buy? Does this qualify for USDA? And then we can drop that bomb on someone like, hey, guess what?
Right.
This house qualifies for, you don't have to put anything down. You just have to bring your closing costs and your prepaids. And that's an awesome conversation. We can have it with somebody.
Yeah, absolutely. I think, people get nervous, and we're talking about 3% down. If you're a first-time home buyer, obviously if you've bought a home before in the past few years, 5% down. But still, that's a pittance compared to a lot of people, like you were saying, think it's 20% down. And I think that you have to just have a conversation. There's multiple down payment assistance programs. Everyone knows about Michigan. We talk about all the time. But there's other ones as well. There's one called the Chenoa Down Payment Assistance Fund that we utilize. There's one specific to localities. So there's one in Port Huron that we can do. There's one out in Pontiac. There's even cities that work to help people get in the home. So make the phone call and work with an experienced mortgage company and experienced lender like us.
Yeah.
So we can help you.
Yeah, because it's all about affordability right now.
If you can keep a couple bucks in your pocket, especially people are freaking out about inflation. They get into a house, they're worried. Everyone keeps hearing about everything's going to cost more. I get it. As a first-time home buyer, I wouldn't want to drain every last penny I had either. So if we can get you some assistance funds so you can keep a few grand in your pocket and not feel like you're going broke, then that puts everybody in a much better position and a
And-
healthier financial
But
outlook.
back to Harvey's point, maybe we do need to save a little bit more money. Maybe
Right.
because if you don't have 3%, maybe, because who knows if that furnace is going to go, that water tank, that AC,
Right.
A tree falls on your house. Like even if you do have if a homeowner's insurance claim, you still have to typically pay $1,000.
Or
So like,
deductible, yeah.
if you can't maybe throw $1,000 here or there, or have somebody in your life that can give you $1,000 to do it, maybe you should save up to where you are a little bit more stable, because you might only have 3%, but then you have closing costs, then you've got your escrows, you got your prepaids. So, and then again, something's always happening. Like
I got something for you.
like,
Go ahead.
my first weekend in my house, I told
yeah.
you, like I had water in my basement.
Yeah.
Oh boy.
So
Right,
like
after you
I'm like,
moved in.
yeah, like it was the week. It was I moved in on a Friday, Saturday. There was a storm that night. There was water in my basement on
Literally.
Saturday.
He
Sorry
called
about
me
that,
and I was
man. I'm
like,
chuckling the wrong.
Yeah, so like there's always something that like
Yeah.
Right.
the universe is going to say, hey, congrats on your home ownership. Here's your first homeowner
Things
tax.
happen.
Yeah,
right?
like I had a client.
All
Okay,
right.
so like they're a longtime client of mine. They bought a house. It was investment property. The day of the closing, a tree did fall on the garage.
For sure.
And literally, so they just
Oh my
bought it
gosh.
and it's insured. And
I
now,
don't mean to laugh in a bad way. This is, the lighter side of things.
yes, but
here.
it literally demolished the garage. But they already, we closed on it, and it was a matter of, but they did had negotiate because you also had the insurance of the original owner, and then
Yeah.
now you have insurance of the new homeowner. And luckily, between the buyer and seller, they were able to work something out between the insurance companies and things like that. And we just did a cash out refinance them like a year later. But part of it was the garage still wasn't fixed, and so
Right.
we had to wait for it to get done and all that stuff. But if something's going to happen, you have to prepare, right? So if you don't prepare, you're going to get caught off guard, right? So our job is to set those expectations, make sure the insurance is done, make sure that once
Yeah.
you're a homeowner, you can afford, because all those things do fall on your lap, and you need to make sure that I'm very big advocate on living under your means and
Absolutely.
even at your means.
Absolutely.
You're married to your spouse, not your house.
Right. Yeah, absolutely. We're not setting people up to fail financially. The whole point is let's not push you to the limit where one little thing is going to put you over the edge. That's not
Right.
the goal. We want
Right.
to set everyone up for financial success, because your home is usually your largest asset, right? That's what people always say. That's It's a really big deal. It's part of your financial portfolio, and we want to make sure that it's a successful one.
Kicking around last night at one of these family functions. I got a wedding weekend going on, meeting some new people out there, and I'm always getting into people's stuff. Usually later that night, I regret I have to think or ask did I say something wrong?
Yeah.
But yeah, just talking to my man
You're like,
Oz
"Why am I
last
like
night.
this?"
My new buddy Oz comes in from Chicago, and he bought a place in 2021. He's telling me in a condo in Chicago, and sure enough, condominium association fees, and we get into that conversation, and we were talking about the monthly association fee and checking that budget and all the important stuff. Sure enough, he had some friends that got into a unit with low association fees, and then boom. The whole building needs a whole AC unit. It's $250,000. Now all of a sudden, that $500,000 reserve budget at that condo, now it's cut in half. And then you never know. The elevator goes. That's another $100,000. So you think everything's hunky dory. You're living in a great condominium. It's 7 stories. You got an association. Read the bylaws. Understand the budget. We're here to go over all those things with you. Again, we don't have as many of those in Detroit, but we are starting to get more and more rehabs in our major cities here. Again, you see them in Southfield and bigger condominium projects. Again, I'm talking about more high-risey stuff, but even in your low-level condominium projects, again, there's a lot of due diligence up front.
Yeah, absolutely. I mean, I feel like a lot of times too, to piggyback on that, is reading the contracts.
Yes.
The buyers, a lot of the times they're not reading what they're signing. And the reason why I'm bringing it up is I have a client, he was in the process of buying a HUD home from Fannie Mae, right? They exist and all that stuff, right? But they're very specific contracts. And right now they're offering those homes to people that are going to occupy the house before investors, because it's important. They want those individuals to have first access, because the investors were coming in, gobbling up these low
It's
income.
our part of the program,
Yes,
too, yeah.
So they're making sure. Well, he originally was qualified as it was going to be a second home. So when I'm reading this contract, I was like, hey, I'm like, this isn't going to go. I'm like, did something change with what we talked about yesterday? And he said, no. He's like, but, I just signed. I was busy at work. I was signing. I'm like, no. I'm like, this contract is not going to, we can't do this. And I had explained to him why. And so we had to kind of make some changes. But it's very important that you are reading the contracts and you're understanding what is going on, because people don't read them and then we read them for you. And it's a problem.
And then you call them and say, hey, you just signed a contract that says you're going to take over like an assessment on a condo. I had somebody do that. I said, your contract says that there was an assessment. They were on year 1 of 10. And so I said, you're going to be paying.
Right on.
You
Yep.
know, years 2, 3, 4, 5, and I said this is going to be incorporated into your association, and they were like, wait, what?
Yeah.
Because the assessment was literally about double what the association fee already was. This person had no idea. They said, well, no, he goes, my agent said that it would be paid at closing and that the seller would be responsible for the whole amount. I said, well, that's not what you just signed.
Matt,
Read.
Matt, we love the condominium conversation.
Right,
Associate, look, we love that lifestyle.
You're
too,
giving
though.
me
Let's
you're
go
giving me
there.
heart palpitations.
No,
Jeff.
you're doing okay
Yeah, I
over
was gonna say,
there.
like, Matt just went somewhere. He
Matt,
got sweaty.
one more little thing about condos, of course, that's that buying power. If you got an association fee of $400 with today's interest rates, 50, it's $60,000 of buying power.
Sure.
But the lifestyle of condominium living is also very great.
Yeah, I mean, depending on, we've got some great riverfront condos here.
Oh, yeah, beauties.
We've got some super great campuses with gates, with the riverfront. You've got they're building parks in the east and the west side, so you're supposed to be able to walk from Belle Isle all the way to the Ambassador Bridge.
Awesome.
So there's some decent
That's cool.
condo investments where they're building parks around it that aren't there now. So when the park's there, you're going to have great opportunities to show, hey, that's my view. I can sell it. We also have these NEZ neighborhood enterprise zones to keep your tax abatement at like $1,000 a year. So you're going to be paying more in your HOA than you will in your actual property taxes. So condos are definitely a good lifestyle depending on what you want to live.
Do you know those are not transferable in the city of Detroit? See? They're not.
Well, you can file an NEZ age
You have
after.
to get your own after, right? But they're not transferable. But these are the things why you need to work with experienced people.
All righty.
Who
Hey,
you
we're up
work with
against
matters.
a quick
Yeah.
break here. 248-539-9797. It's a Hardcore Mortgage Real Estate Business Show. We'll be right back. All right, we are back here, 9:45. A little cloudier today. Well, we usually say it's, why not? Go out there and look at a great house. Get that approval letter first. Call Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage bank. That's 1-800-569-7283, where experience counts. We offer every mortgage available in the U.S., whether it be a reverse mortgage, a jumbo loan. We got the best jumbo pricing in America. You need an adjustable rate mortgage. Maybe you're only going to stay in the house for 5 or 7 years or 10 years. We'll talk to you about that, Becky, even though it's a fixed rate market. We'll definitely take your calls here in the studio. 248-539-9797. I'm Harvey Freed. She's Becky Ellie, Lisa Lawson, Matt Bush, Remax First. Always great to have you in here, Matt. As we're in our last segment here, Matt, I'll just really turn it over to you again. We were wrapping up the condominium conversation. They're wonderful. I know it's one of your things. You're getting people down in the city. They're building a whole bunch of new projects, even here locally, low rise. Nice place for people to retire, some around golf communities. Lots of great reasons why that might work for somebody.
Yeah, and I mean, sometimes, we were talking about the HOA fees, but, if you don't want to cut grass, if you don't want to be shoveling snow, it's honestly one of the better ideas just because you have all the luxuries, especially on the water. I'm an East Sider, so Harrison Township, St. Clair Shores, where you can just pull your boat up and walk right back into your house. There's not a whole lot better than that on a nice summer day like this.
Yeah, I was actually on 4th of July, we're on Higgins Lake, and it was obviously Higgins Lake is gorgeous, right? But I was talking to our daughters, and I was like, oh my gosh, could you imagine? Instead of you don't drive to your friend's house, you just hop on the pontoon boat, drive across the lake, and that's how it's like your little boat caddy. I mean, that's awesome. It's a beautiful lifestyle. And, in second homes in Michigan, I love Michigan because we've turned into a 365 state. I feel like we're not a seasonal state anymore as far as you're selling, but people are still trying to still get those second homes right now. And it's beautiful because you're a very big advocate on the generational wealth.
Absolutely. Yeah, I mean, that's how you got to set up your family for success. Real estate is the number one reason that people are millionaires, billionaires, successful, because people invest in real estate. That's one of the things that you can't print more real estate. You can't, what's Jordan Davis say? You just buy dirt. They don't make it anymore.
Right.
So it's just one of those things where if you want to be successful over the long term to stave off inflation, housing prices are going up, even with inflation going up. So it's one of those things that it'll always help you and your family, and it puts you in a position to be successful.
Yeah, I mean, if you're looking at a financial, even a portfolio, right? Real estate sustains, even in a recession market, for example, real estate is worth it. When you hold on to a little bit, I mean, everyone's portfolio right now is just jacked up. I mean, I don't even look at my 401k right now. I just don't, but real estate, it's a way for you to also build wealth. So if you are so fortunate enough to be able to afford your primary home and a secondary home, God bless you, right? I mean, and why not do that if you're so inclined to do so? Because Michigan is a beautiful state. Yeah. Even if you're trying, we're a national lender. So even if it's not in Michigan, if you want to buy that home in Florida, Texas, California, whatever it is. Hawaii. Yeah, we're all over the place. So we can help you kind of just take it to the next level if you're able to do that.
You see a lot of that even with real estate agents out there. The ones that I know that are in the game, they'll put out there. I got obviously a lot of connections in the real estate market, and these guys are calling me, Harvey, I just bought my first commercial building. Harvey, you know what? I invested in one. I'm buying this one down in Florida. Whatever it might be, it's an investment property. So again, get a little piece of that real estate. Work with people that are really into the industry, that have bought and sold. Whether it be residential property or commercial properties, find out where that conversation is going to lead you. It's really exciting stuff. Second home purchases are really hot now. They should get even hotter now because, again, Becky, what's going to happen? Are you going to want to buy that place in Florida or Texas or North Carolina? If you want to go fight everyone else come wintertime, then go ahead, help yourself in December. But now is an open window. Also, maybe before prices go up, maybe take a look at that vacation home you're talking about. We're licensed everywhere in the United States. So if you're buying in, it could be anywhere, Hawaii, California, Arizona, Florida, call Capital Mortgage Funding and maybe do it now. Don't you agree? If you're looking at buying, why not now?
Yeah, I mean, it's always why not now. We're always talking about do it now before XYZ happens, right? It's not doomsday. It's just that this is our full-time career. We don't do it sometimes. We do it every day. And everyone in this room has seen the toughest markets. We've all been in here over 19 years at least, right, with the experience. So we've seen the worst of the worst in markets, and we've also seen the best of the best in markets, right? And if we can tell you to do something now, why hesitate? Because if it works for you now, why wait and see if it's not going to work for you in a couple months?
Right.
People are still buying cars right now, right? At 9, 10, 12% interest. People are still putting stuff on their credit card at 18, 24%
Yeah, that is so true,
interest.
yeah.
30.
You know, just so what's so bad about 5.5% to 6% interest? You know, marry the
It's
house.
tax
Yeah.
deductible.
Marry the house, date the rate, right?
Right, yep.
The rate's going to change in the next 5 to 7 years. You know, the average homeowner refinances or sells their house in 7 years. So
that
you're
one.
not even going to be in it long enough
Right.
to feel the whole thing.
Yeah,
You
I'm
know,
big on, like, I think was you're looking for your forever home, not your forever loan, right?
Yeah.
And people will sell their house and they don't even think about it, right? Oh, I'm going to buy this house and something happened, I'm going to sell it. So, and when people get so worked up over these interest rates, but they don't think twice about paying 18% on their credit cards or whatever. And, you know, with the pandemic, a lot of people got into some credit card debt, you know, because maybe they were considered non-essential, but they couldn't work remotely. There's a lot of things happening, right? So even a cash out refinances are still happening. It's situational.
yes.
It makes sense for
Yep.
some
Just
people,
wrote one
and you're still
yesterday.
able to save someone money, or if they need to renovate the home because something did happen, you have the equity in the home to do so.
the average home owner last year gained $56,000 worth of equity in their house.
Yeah, that's nuts.
Now that's not just Michigan because we're not the average
Yeah.
market.
Yeah.
But if you gain 10 to 12% equity in your house last year, and maybe you took on some debt. Maybe you started one of those gig businesses, or you're working remotely, so you needed a new office, or maybe you just started a completely different occupation, but you took on some debt to start it. Maybe now you're self-sufficient. Let's wrap that all up together as opposed to paying Visa, MasterCard, whomever.
Right.
Yeah.
And we'll put it all together. You have one nice payment. It all goes together and fuel what passions you.
Yeah, look, a little bit of a slowdown there in single-family permits for builders and new construction from 2021.
What
Things
else
were
is new?
jumping right to
Those
2022.
builders.
A little slow in the Midwest, but definitely not in Texas, Arizona, Georgia, North Carolina, Florida. So again, things are happening across the country. Homes are really affordable in Michigan. That's one thing I always, when I watch the HGTV shows and stuff, you know, it's
And they're
always
buying the $1 million house, and they're
And
like,
there's nothing there.
They're like a goat herder. Is their like occupation? Whatever.
house in the middle of nowhere, but it doesn't cost anything. Anyways, or it's a mansion, right? What about Atlanta? It's always, these guys got mansions there for $500,000.
You get a lot for your house out there for sure.
Different parts of the country have different things, but here, Matt, it's affordable and there's lots of jobs out there. Again, call us. Let's get this moving in this right direction here if you want to become a homeowner. I'm sort of getting burnt down on taking calls from people that have no credit and no money. Folks, let's get it together. Make the right call. We can show you how to get your credit scores up.
Yeah, let's just put you in a plan. Like I remember, when I bought my first house, like I said, about 7 years ago now, I closed in July, but I called Lisa in January. We sat down. I showed her my tax returns, all my bank statements, mildly embarrassed. And she said, all right, well, don't worry about it. These are the things that we're going to want to do to put you in position. So when you find a house, we can write a legitimate offer and make you successful. We waited 3 or 4 months. I wrote an offer. I think it was in mid-May, and we closed in mid-July. So, having these conversations and pre-approved and just knowing where you're getting into, that makes all the difference in the world, as opposed to, going to an open house, signing with somebody who's probably just holding it open because they don't have anybody else to work with, then going on the internet, clicking a button and giving someone your social security card.
Oh, boy.
And then saying, all right, agent I've never heard of or never worked with, and here's a loan letter from...
Blows my mind that it happens every day, doesn't it?
The
Here's
reality
something
is-
from onlinebank.com saying I'm pre-approved for $1 million.
Someone
It's
pinch
right
me.
Even though
on-
I never had a conversation with this person.
Yeah,
you
so
know?
like when we're doing a pre-approval, we're not just like, oh, you think you. We're doing like a full financial scope
analysis.
analysis.
Yeah.
Absolutely.
We're literally looking at everything. We're going to look at the 401ks. We're going to look at your assets. We're going to look at the credit. What can you do? Something so small. You might have great credit, but we're going to identify even something that's going to take you to the next level because we do this every day. Lisa, I'm always proud to be in the same room as you because literally you are the best of the best when it comes to things like that. You literally,
tell
you take the
people-
time and
yeah.
we analyze things and, and that's what sets you up for success. And that's why we have the referrals that we do because we're not transactional. I don't even care if you right. I know that you're the same way. I don't care if you don't buy a house ever. I'm still going to treat you that same way. We're
Right.
still going to have that same
I
conversation.
tell people all the time, I said, you're in the middle of the biggest transaction in your life. And if it takes 3 minutes out of my day to run a few credit analyzers or some scenarios so I can maximize your score because, it doesn't take a lot to get you a better interest rate. These
Right,
credit,
right.
we call them buckets. They're only 20 points apart. Someone with a 600 is not going to get the same rate as someone with a 620 or a 640 or a 68. So every 20 points makes a difference. And usually getting 20 points isn't that big of a deal. Like there's usually very small changes we can make. Sometimes they don't even cost you money. Sometimes it's just shifting or closing an account. I mean, something that costs you or removing your name from an authorized user account because someone else screwed up and you don't even know about it. It happens all the time. If it costs you no money and I can get you a better rate, not only does it help you on your mortgage, it's going to help you on your car insurance and your homeowner's insurance because they all pull these types of scores. and it only takes a few moments. So I really believe in maximizing everybody's potential. And part of that is maximizing their ability and their credit profile. And for me, it's just part of the service that I offer every single client every single time. And I believe we all here do that.
Yeah, we do that. And we take it like these are little things that we don't even really preach about because we just do it. We just assume it's normal, but it's really not normal in the market.
But when you're doing an online application and you're putting submit and getting a pre-approval letter, they're not looking at your credit that way.
No,
They're
when the
not
manager
saying,
of Blue Pens with erasers on top calls you, he
Right.
did not do a full analysis of your stuff.
They don't know that if you had done this one little thing, your score would have gone up 40 points and we could put you in a whole different loan type that would have maybe got your offer accepted because you're stuck at FHA and you don't know why. But really, we just needed this little bump. So these are the things that we do.
Yeah, or maybe we're in a USDA area, right? And you could qualify. So we're going to save you that 3% that you were all the guy, or 5% or 10% that you were planning to put down, and now we can update that house. You can have that acreage. You can work, telecommute. You can work remotely, and you can have everything you could possibly want.
Yeah, I mean, I feel like the working remote and those, like, I feel like it changed what people are looking for in their homes or like where they want to be located. Do they want more space? Do they want to be on top of their neighbor? Do they want to have some acreage, right? And some people can work anywhere. I have a client that is employers in California, but they're here in Michigan now because they can literally work wherever. So now they are just going to go ahead and be closer to their family.
Fixed income is what's going on out there in the world. When you start talking the bond market and what's happening with interest rates, I don't know. Today's rates might be considered really, really low. So if you're out there looking to buy a house, definitely give us a call. Capital Mortgage Funding, 1-800-LOW-RATE. That's 1-800-569-7283. Have people in the office all weekend long. That's where you can find Lisa Lawson, Becky Elliott, and myself, Harvey Freed. We want to thank you, Matt Bush. Thanks for coming in. RE/MAX First, Matt.
MyFirstHouse.com.
All right, that's where you can find him, myfirsthouse.com. You'll find Matt Bush right there. And, of course, call Capital Mortgage Funding. We'll get you set up with that approval and get you hooked up with Matt. All right, we got Pat Caputo coming up with sports and a whole lot more. Keep it here on 97.1 The Ticket. See you next Saturday.